Hey guys, welcome to our daily news review, where I'm going to scan through the day and try and tell you everything you need to know in 3 minutes or less. Let's get started. Okay, so this is actually a really interesting story. And let's maybe take a second and talk about it. So Shipping Corporation of India, which is India's largest nationalized shipping carrier, and they operate in the segment of crude shipping, bulk shipping, and various others. The government has long been trying to completely privatize them, but they've never really managed to do so. So just to very quickly look at the financials, over the last 5 years, their operating revenue has grown at about 7% compounded, and their profit after tax has grown by about 20% or so compounded. And mostly, I think that's on the back of a deleveraging of the balance sheet, where they've reduced their debt. As it stands right now, the overall debt is roughly 2,000 or so crores, which should be wiped off by the end of the year when SCI lists their subsidiary, which is their non-core assets, which is Shipping Corporation of India Land and Assets Limited, and that should make the company completely debt-free, which is really positive outcome, and will essentially allow the government to realize a much higher price on the 63.5% ownership they have of SCI. And I think that the FIs can see this as well, because if you look at the current holdings over the last 3 years or so, FIs have been consistently increasing their holding in the company, which is also a very positive sign. And as against the 25% or so compounded growth in profit, the stock has only returned about 8% or so, 9% compounded over the last 5 years, which is not only under the market, but also underneath its profitability. So if the government is able to sell off SCIL, which is the subsidiary of Shipping Corporation of India, and is able to then sell the 63.5% stake they have in SCI Limited, that should net them, a pretty penny. Okay, here's an example of a complete non-story that the media seems to want to think is a story, where Tesla executives are in conversation with the government to open up a plant in India, but the reality is it'll take 5 to 6 years before Tesla is able to put anything up. And as they point out in the article itself, the high import duties on Tesla mean that they can't actually import cars and sell them at any competitive price. And not to mention that several local automobile companies have a strong EV position, particularly the Tatas and Mahindras. So it's a complete non-story, but hey, I guess the news needs something to report on. So in continuing garbage news, the US Congress seems to continue wanting to debate whether or not they're going to raise their debt ceiling, which I think everybody knows they're going to. The question becomes when and how, and how much pain are the Republicans and the Democrats going to put each other through before they finally agree on a deal. And some interesting facts around this: the Treasury's cash pile is at the lowest level it's been in about a year, less than a year, 7 or 8 months. So it's not particularly dangerous. There's a lot of hysteria around the cost of credit default swaps, which is the cost of insuring against the default of a bond, which effectively tells you that bond markets seem to think that there's a risk that the US will default on their short-term debt because of the lack of a political will to make a deal. And, part of that is because the debt servicing cost for the US is now extremely high, given the recent interest rate hikes. But, most of this is just theater. At the end of the day, they're going to reach an agreement. They're going to raise the debt ceiling like they have been doing for the last, decade or so. And this is really all just fluff. Oh, this is also very big. ITC and SBI results today. Well, let's look at that. So some really interesting results. SBI reported their quarterly and annual results today, which were expected but still very positive. Standalone profit is up 83%, and there was an expansion in NIMs, and there was a reduction in gross NPAs. So let's dig into that a little bit. So an expansion in NIMs, or the net interest margin, is the gap between the interest paid by a bank and interest earned. So a bank pays interest on the deposits they hold, and it earns interest on the loans it gives out. So an expansion in that net interest margin is generally a positive, because it means it's making more money on its deposits. The other positive improvement was the gross NPA, which was down by about 119 bips or 1.2%. And again, this is positive because it means a smaller proportion of the loans given out by the bank are defaulting. So positive results by SBI, but entirely expected by the market. And as a consequence, the price fell as soon as the results were announced. Unsurprising given the profit booking expected. So another industry bellwether, ITC, reported their results today, which were broadly positive. Profit and revenue both grew quite healthily and met analyst expectations. Seems like there was a slight miss on EBITDA, but all the core segments of the company, which is cigarettes, FMCG, and hotels, grew at a reasonable trend. Agri trading business surprised on the downside, but nothing too far out of line.